That's okay. Well, welcome everybody to today's Success Express webinar, Ask the Expert about Bookkeeping Essentials. Um, I am Sheldon Pernovitz with ConnectPay, a member of the Carter 9495 Regional Chamber Metro West Program Committee, and we'd like to welcome you here today and thank you for coming. And the mission, as you hopefully all know, of the Chamber is to be a dynamic regional business organization striving to promote growth, prosperity, and quality of life for our members and our communities. And the purpose of a webinar is to, to help the Chamber members and their profession in their professions and business development, and we try to design these webinars to be interactive and presented by Chamber members who are experts in their field. And we have one of those experts with us today, whom I'm thrilled to introduce in a few minutes. And just ask you, if possible, to keep your video on, because it helps the presenter gauge the presentation, and it is a networking event also. So if you would like to put your contact information in the chat as well, please do that so others can reach out to you if they would like to. And now I'd also like to thank Central One Federal Credit Union, our sponsor for the Success Express webinar, and introduce you to Heather Fercelli, the branch manager of Central One, and she will just tell you a little bit about Central One. Take it away.
Thank you, Sheldon. Like Sheldon said, I am Heather Percelli, branch manager of Central One Federal Credit Union. Central One is a proud sponsor of the Quarter 9 495 workshop series. At Central One, we want to be more than just your bank. As a 100% customer-owned credit union, we provide better rates, genuine service, and a commitment to helping you achieve your goals. Since profits aren't our main focus, we always prioritize you and the communities we serve. In addition to personal and business banking, we also offer in-house financial services that include auto, home, renters, and commercial insurance through our Oak Tree Insurance Agency, as well as life insurance and financial planning through our Retirement and Investment Center. We are proud to be a perennial top award winner or mention in the Worcester Telegram and Gazette's Best of Central Mass Reader Survey in the credit union and financial planning categories, as well as our Oak Tree Insurance Agency winning Best Insurance Agency the last 3 years. Given there are many larger institutions people could vote for, we are grateful that those we serve appreciate us so much. If you haven't yet explored Central One and how we can help you, I hope you take some time to check us out or speak with us at chamber events. Thanks for your time and enjoy the workshop.
Thank you, Heather. And it is my pleasure to introduce Megan. But before I do, I want to also put in here, if you have questions, if questions come up, or you have questions that you'd like to ask her, please put that into the chat and we'll try to monitor those questions and she'll be thrilled to answer them. And so it's my pleasure to introduce Megan Jackson, a senior accounting professional and the owner of M. Jackson Accounting and Bookkeeping in the greater Boston area. Megan takes a hands-on approach and becomes a trusted advisor to small businesses by working with them to simplify, update, and streamline their bookkeeping practices and software to support their business objectives. Megan utilizes her accounting expertise to pave the way toward financial transparency and stability for her small business clients. She believes that when clients are more comfortable with their accounting and bookkeeping systems, they're better able to focus on their goals, and make their books a key factor in driving strategic business decisions. Her mission is to understand clients' financial needs and to guide them with personalized advice and practical solutions. She's passionate about teaching and coaching clients to have a confidence and understanding of their numbers, helping them accept where they are, dream big, and take the right steps to grow stronger. She holds a Master's of Science degree in accounting from Northeastern University, go Huskies, a Bachelor of Science, a degree in business administration with a focus in accounting from Worcester State University, and an associate science degree in business administration and management from Massachusetts Bay Community College. As a certified QuickBooks Pro advisor, she works with clients to learn how to optimize their use of the software to support their business objectives. Megan draws on over 20 years of experience providing expert advisory and consulting services, bookkeeping, internal audit controls, and QuickBooks implementation services to clients across diverse industries, including professional services and skilled trade sectors. So without further ado, take it away, Megan.
Hi, guys. So, my name is Megan, as you guys have found out. Who here does not like accounting or bookkeeping? And it's totally okay to admit that. My entire goal is to try and demystify it and to try and make it a little bit easier for all of us to be able to use. Now, are you guys able? That being said, presentations, there's a reason I'm an accountant, not always a PowerPoint person. Are you able to see my screen? Yes.
Yes, all
Okay.
good.
That's fantastic. I will not tell you how long it took me to figure out how to do that, but it took a while. All right. So today, the entire goal is for us to kind of go over just bookkeeping basics to try and give you some of the ideas of some of the fundamentals that are being looked at. If any questions come up, please just interrupt me, jump in. I would much prefer us to have a conversation rather than me just be talking at you. Okay. But I will start by doing the talking at you. So I'm seeing that my thing is not going. Hold on. There we go. Course objectives. Everyone see that? Okay, wonderful. So what our goal is going to be today is we're going to just try and talk about some core accounting concepts. We're going to talk about the structure of financial statements. And then there are a couple of different transactions that I'll give just to kind of show the flow and to try and help understand what that is. And then we'll talk about things like software and how we use those to help benefit us in those. So the number one thing about accounting is there are multiple ways of doing accounting. But the big ones that you need to remember for your business are you working on a cash basis or are you working on an accrual basis? And what that comes down to is timing. Okay. When we're thinking of a cash basis, I want you to think about like when you're sitting down at home, you're sitting down with your checkbook and you're writing out a check for the electric bill. We're talking in that moment, we're talking the payment is coming out of your checkbook at the moment that you're writing the payment, and it's paying the bill that's sitting right in front of you. That is the easiest way to understand cash accounting. Okay. The transactions are recognized at the moment they happen, and then we go on from there. When we're talking about accrual accounting, that's when we start getting into things like invoices or we get into things like bills, and there's a timing delay. So if you've ever looked at your electricity bill, you'll notice that it's talking about a certain time period that it's covering, but that time period is not necessarily the same time period as either the date of the bill or the date that your payment is expected. When we have situations like that, that's when we're looking at accrual accounting. So if I wanted to pay my rent for next month, I'm going to pay that most likely on September 30th for October 1st. I still want to know that that rent is for October and not for September. Because if I'm looking at my books and I'm trying to measure against it, that matching principle is going to help me when I'm making certain expectations in the future. There are ways to do this modified, and there are many times that companies will run their books on an accrual basis, but they may do tax basis. Um, they may do tax basis for their taxes. So anytime that you're working with anyone's books, whether they're yours, whether they're someone else's, you always want to know what bases are you working on. And then also making sure that you have the systems behind it to support that, to be able to make sure that you're getting that information in a good way. And that's one of the ways that we use software sometimes to help us with that. Okay. The accrual basis does give us a better picture of what the actual health of the company is because we are seeing when those expenses and when those revenues are coming in the time period versus with the cash. basis, which will tell us when we got paid, but it won't necessarily tell us when we did the work. So if we're looking at things from a projection of wanting to be able to use that information to measure against in the future, or to better time when we need to have certain cash flow for our company, I tend to lean more towards that accrual basis when I'm using it for planning purposes. Okay. The next thing that we want to talk about is single entry versus double entry. So in accounting, we always talk about balancing the books, but no one has any idea what that means. They see us, they're like, are you just holding plates? Are you just kind of balancing them? It is more a matter of single entry is like when you're using that checkbook at home. I probably am going to have to change that reference because how many of us actually use checkbooks? But think of it more like your debit card. Okay. You use the card, you have the expense, you have the money come out of your account, right? Double entry is where we are actually balancing those transactions. So, what's going on behind the scenes in accounting systems or bookkeeping systems like QuickBooks is you may be entering something into a form that shows an expense, but what is actually being accumulated in that form is all of the information, not only that are going to go into the entries, and to make that balanced entry behind the scenes, but also giving you descriptors and information that are going to be supporting in your financial reports and in that subtext behind that. So when we use accounting systems, we're using forms to simplify these transactions to go into the system. One of the reasons it's really important to understand how these functions work is because if something goes wrong in your system or it's not set up correctly, if you don't know where things are supposed to be on your financial statements, if you don't know where things are, what it's supposed to look like once the entry is actually done, if something goes wrong, you'll never catch it. Okay. I get a lot of work from bookkeepers and clients that did not know those structures beforehand and don't look at the reports on a regular basis. So you don't want to have to hire me for those situations if at all possible, because it gets really expensive. All right. But that double entry is the foundation for accounting. If you've ever heard anyone talk about T accounts, don't worry, I won't make you do them in this one. But like T accounts are my favorite thing because then we can literally plot through and you can see where everything goes. And then you'll understand why you want to use accounting systems and things like that because it will look like this crazy mad mind behind it. It is just like one step above the abacus. Um, Another important thing to know is what is your calendar year? Are you on a calendar year? Are you on a fiscal year? I can tell you that the chamber runs on a fiscal year and they go from July 1st to June 30th. I have nonprofits that will go from September 1st to August 31st for their fiscal calendar. Governments tend to go October 1st to September 30th. And then we have school systems that will go usually, depending on what school system or depending on how fancy their different pieces are, can actually have multiple fiscal years within them. But the reason that your fiscal year is really important is because you want to know when you actually have to pay your taxes. You want to know when you need to file. Some people will change their to a fiscal year because they may be able to get a better break on their tax accountant, depending on which one. I used to work for a startup company where our fiscal year end was actually January 31st instead of December 31st, because when they started the company, they realized that they actually wanted to enjoy their holidays. Um, so there are lots of different things, but those choices they'll impact your reporting and they're also impact your tax schedule. Whenever we're talking about financial statements, there's always three different key financial statements that come up. We have our profit and loss, which everyone should hopefully know about and looks at on a regular basis. That is going to tell you your revenue. That is going to tell you if you are a company that uses cost of goods. That will also tell you your expenses. So from all of those things, you'll be figuring out net profit, gross profit, and being able to use those. That is also a small snapshot of a time period. Your balance sheet, which is one of the things that if you're ever going for loans or any kind of thing for banks, that they will request, the balance sheet lists all of your assets, all of your liabilities, and your equity. And the reason that it becomes really important to understand the subcategories within that is because the banks will use different portions to figure out ratios, to figure out if you are a good lending option. Okay. And then the cash flow statement. I will be 100% honest. Normally, only finance people are talking about the cash flow statement. And the reason is because it shows all of the inflows and the outflows of cash, and it's based on the information that comes from both the balance sheet and the profit and loss, but it breaks it down into what were your operating expenses, what were your lending expenses, and then what were your equity transactions. Most of the time, the clientele that I tend to work with, we don't work with that as much, even though it is very important information. But we tend to do more smaller snapshots to be able to make sure that their cash flow, they are making their numbers, they are meeting their things. But if you're ever asked for financial statements from your bank, you most likely are going to be asked for a bare minimum of your profit and loss in your balance sheet and likely a cash flow statement. The one thing I will tell you, make sure that when you give them those statements, the dates are the same, as well as the cash versus accrual basis. You would be amazed at how many times people will come back saying the bank didn't approve me. They said there was something wrong. And if it's not the way that their statements are structured from the chart of accounts, it is most likely because it was a timing issue and they didn't actually give the same dates for each of the reports. So the numbers weren't actually tying together. All right. When we're looking at our profit and loss, there are major components that go into that. So you heard me speak of revenues and cost of goods sold. That gives us the number that gives us our gross profit. Once we subtract from our gross profit the expenses, that gives us that net profit. You'll also notice that I do not tend to use the word income. Words become very important in business and in accounting. I cannot tell you how many times I've actually sat in boardrooms with some of the smartest human beings on the planet and heard them argue over who was talking about income and who was actually talking about net income. Because one was using revenues and the other one was using the word income. So anytime that I am presenting, I am trying to stress those words because of all of those conversations I've had. I won't lie. Sometimes it's kind of amusing to sit there and watch them battle it out. But at the same time, it's not a good use of time. When we're looking at the balance sheet components, we are looking at those assets, liabilities, equity. One of the things I like to do with my clients is I work very hard to not speak like an accountant most of the time. And I try and use any way possible to help people remember what different things are going to be. So if you ever need to look at a balance sheet, just know that you're going to want to drink ale because you've got your assets, you've got your liabilities, and you've got your equity. That, and it's just boring sometimes to look at these unless you're a nerd like me. Okay. One of the things is assets are always going to be what the business owns. They're usually listed from most liquid or cash down to the longest that it will be on the books. Okay. And so what I mean by that is our cash is always going to be king. Then we'll go into things like marketable securities. We'll go into our accounts receivable. We'll look at our inventory. We'll look at any security deposits that we have. And then we look at things that are more intangible, like goodwill or patents or things like that. That kind of hierarchy also goes through in the liabilities. So when we're looking at our liabilities, that's what the business owes somebody else. So for shortest term, that would be credit cards. Longer term, we're looking at those long-term liabilities, those car loans, those mortgages, those bigger ticket items that are paid off in over a year. And then when we're looking at equity, what we're looking at is what was the money that was put into the company? Were there any investor fundings? Do we have any common stock or preferred stock? Depending on the size of your company, is going to change the way that we look at your equity. If we're looking at equity in smaller companies, we're very often looking at what's the owner's draw. And owner's draw is how you're paid from a sole proprietorship because you can't be on payroll. If we're looking at distributions or partnerships, I mean, S corporations or partnerships, we're usually looking at distributions. We're looking at things like guaranteed payments, things like that. And those are some of the shifts that you can see in your equity area. Now, the fun part, the chart of accounts. If you've ever heard an accountant talk about a trial balance or a chart of accounts, this is what they're talking about. I'm going to demystify it. It is literally just an entire list of all of the accounts that are in your accounting system. I refer to it as the backbone or the spine of your company because each little piece is another foundation within that. Okay. But basically, what it is, it's just those big buckets that we're putting all of our information into when we are doing our books. Okay. It's just the buckets. So we have the big buckets. We always start out with who we have to report to. So we know that we have to report to the federal government. We know we have to report to the state government. So we'll always start out with the accounts that show up on the tax return that apply to your company. But from there, we can actually break those down to give you better visibility into your company because I use an example all the time, and Laura's probably going to roll her eyes, but I use it about sticky notes. I am the sticky note queen. I don't know why. I've got them in all shapes, all colors, everything. When I started out doing my books, I literally had a line item for sticky notes. But the thing is, I'm an accountant. I don't sell sticky notes. Sticky notes are just like a passion project, apparently. It looks like a beautiful mind over here on a regular basis. But I don't need to know how many sticky notes I have, how many colors I have, whatever shapes I have. And by having those listed out within my chart of accounts, every time I would go down to sit down to do my bookkeeping, I'd be like, oh God, I don't want to do this. I don't want to do this. This is too much. And it would be because I had to break things down. So we use that chart of accounts to help organize our information, to help us figure out who we have to report to. And then we also look at our business and our structure and what we need and want to look at. Okay. The more granular you get, the more information you can get out. But the more granular you get, the also more detailed you need to be when you're entering it. And a lot of small business owners, especially if you're running solo, don't necessarily have the time to do that. So we want to kind of look at it from that perspective and make sure that we're setting up the books so that your accountant is getting the information they need, whomever you're reporting to is getting the information they need, but most importantly, so you can use that information to better your business and make better decisions. Okay. Actually, before I talk about that too, those chart of accounts, every chart of account that we have is going to have one of those subsectors on whether it is an asset, liability, equity, revenue, cost of goods sold, or an expense. Okay. And the reason that that becomes important is because those larger buckets that I just gave you help drive what information shows up on which report. Okay. Debits versus credits. This will be the most confusing part of any accounting conversation. Any accountant who ever tells you that they don't have to sometimes stop themselves and go, is that going the right direction? They're, they're lying. If they're not lying, please don't tell me. But 9 times out of 10, they're lying because I can't tell you how many times I can turn myself around in a journal entry and have it go the backwards way. But the reason that I can catch it is because I know where to look on my reports when it's been done. Okay. Not only that, depending on what accounting systems you're using, you should never be doing journal entries or you should be doing them very sparingly. Okay. And the reason for that is because, once again, most systems now use forms. And when you go outside of those forms, it will affect where things show up on reports. So you always want to follow the systems that you have in place and utilize them to the best of the ability. Accountants in general, especially tax accountants, we don't like to do that. All right, because we know where we want the numbers to get. We don't want to deal with the forms to get them there. So if you ever have your books come back from your tax accountant, you're like, why is this number here? Go look for a journal entry. hmm Especially in QuickBooks, if you ever see something that says all customers or all vendors, hmm we've been there. We've been there. I actually started my entire business after I worked in the tax field because I saw how often that was coming back to my clients and how confusing it was getting for the clients and how confusing the conversations between the tax accountants and the clients would be. So, when we're looking at it from a tax perspective, we're looking purely at the numbers, we're looking purely at projections, and we're making sure that everything that we're needing to do goes into that tax form correctly. When we're looking at it from a management accountant perspective, or if we're looking from an advisory perspective, we're looking at those financial reports and utilizing that information to help move the different pieces of the business and work on the operations more often than not. So you can have one accountant who can have multiple kinds of mindsets. If the, for me, I came from startup companies. I've worked in many industries. I've done financial reporting and I've also done tax accounting. So I tend to look at it from that whole global shift. But when I was in the tax firms, we would look at it straight from what numbers do I need in order to get them into my tax firm, yeah, into my tax forms and to work off of that. So sometimes we'll see some differences in that, but everything comes down to a debit versus a credit. So we've heard it in science, we've heard it in people talking about balance, we've seen it in like the yin yang symbols. We're always talking about balance. When you have any kind of accounting transaction, there is always going to be one side that's debited and one side that's credited. Sometimes we have multiple debits or multiple credits on each side, but either way, that number is always going to have to balance out to zero. Okay. Our chart of accounts assists with that because all of the underlying components within the categories either lean towards a debit balance or a credit balance. And what some of this looks like in theory, nope, I'm going to jump ahead, is when we're looking at actual transactions. So in this case, this is if a company was buying a piece of inventory. Okay. So if they're buying inventory, that means that they're most likely going to sell it at one point. But this transaction example specifically is if we're buying that inventory to bring into our business so that we can then turn around and sell it at another point. Inventory and asset accounts tend to have debit balances. So as we bring that in, we're going to debit our asset to increase the amount of inventory that we have come in. But we also have to balance that out. So the other side of that transaction is actually a credit to either our cash account or our accounts payable account. By doing a credit to the cash account, we're actually reducing an asset, which means that we are crediting and reducing that number down. So if I had $100 in my checking and I bought $50 worth of inventory, I'm going to have $50 left in my checking at the end. Okay. The reason that it also works on the accounts payable side is because an accounts payable is a current liability, and current liabilities tend to have credit balances. Okay. So that's how we can move things through our balance sheet. I promise it does make more sense when we start to kind of work through it, but I wanted to make sure to give you an example of what that looks like. I'm going to go back to my last slide just for a moment. Our books sometimes will be set up in different ways on whether or not we have cost of goods sold or not based on our industries. So the inventory example I used could be for like a fencing company who brings in, manufactures, and then produces a product out to someone. It could be for a floral shop. They're bringing in flowers that they will then use to make floral arrangements and send out. When we're looking at service-based businesses, we don't necessarily always carry inventory. Like a straight massage therapist who does not sell any lotions, does not sell anything like that, we're not going to have to worry about inventory for them. I'm an accountant. Most of the things I do, unless I'm teaching and actually selling books or classes, I'm not carrying inventory at all. So I don't have to worry about that aspect. It can be very, very experience based. It can be very niche based. So when you're setting up your books, you're going to have basic foundational items, but you also want to make sure that you're thinking of your industry and you're thinking about how you would be measuring or benchmarking against other people within your industry as well. Okay. But that being said, your books also don't have to have the same chart of accounts as the same person in your industry because you might be more focused in one part of your industry than they are. Okay. Another easy example for what a transaction would look like is when you're paying your rent. Okay. And I'm basing this on a cash basis, but in that case, you would be debiting your rent expense, and that expense typically carries a debit balance, which is why that debit goes there. And then you're reducing your cash, which is your asset. And cash is an asset, which usually has a debit balance. So in order for us to reduce that, we would be crediting that. This is the whole reason we have accounting and bookkeeping softwares, so that you don't have to remember what debits and what credits most of the time. As long as you have your chart of accounts set up correctly and you have your forms set up correctly, things are going to go into the right direction. Okay. All of these transactions, though, actually lead and build into your financial statements. So as you're entering them in your system, if you are using a system like QuickBooks, it is going to automatically be updating your profit and loss and your balance sheet as you're entering items into those forms. If you're using a more true accounting system, you may be having someone enter, and then you will actually have to post batches before they show up on your financial statements. It all depends on which system you're using and the architecture beneath it. Okay. But all of those transactions lead into those financial statements, and those financial statements can actually tell you a story. So one of the easiest ways that I like to explain the profit and loss is, who in here has children? Anybody? Okay, awesome. So you know how your kids at 3 years old are not necessarily the same kid at 11 years old or 18 years old or 26, right? So if we're looking at people and we're looking at them, oh, here are the milestones that happened when they were 4. Here are the milestones that happened when they were 11. Here are the milestones that happened when they were 26. We're looking at that period of time. That's how we look at a profit and loss. Okay. When we're looking at the balance sheet, that balance sheet is the accumulation of all of those years of experience and mistakes and fun and sadness. And all of that makes up that one whole human being. Your balance sheet shows the projection, progress, or retraction of your company over time. Okay. Because every year that you have a profit and loss, that number goes into something called retained earnings. Okay. And that retained earnings accumulates and grows across the company over time. So that's why banks will actually ask for a profit and loss and a balance sheet, because we could show an amazing year or we could show an absolutely horrible year, but that might not be indicative of what has actually been going on in the business the entire time you've had it. So they want to be able to measure against that, as well as use some of those current liabilities and current assets to be able to figure out, can you actually cover the cost of a loan? Okay. The cash flow connects the two, because the cash flow takes the operating information, which is what's been paid and what It's the net effect of what's happened on the profit and loss, but then it takes in the two components from the balance sheet, which are the financing activities, which would show up. Yes, financing activities, which would show up in your liability section, in the movement in your liability section. And then it also will show the equity activities, which show up in your equity section. And that can be the common stock or the funding or financing and things like that. All right. So I've referred to this slide a couple of times throughout. When we're using systems like QuickBooks, when we're using systems like Xero or SmartBooks or any of these ones that are out there that are specific accounting specific. And I say that because there are a lot of apps that will do one side of transactions, meaning they'll cover your accounts receivable, but they won't cover your accounts payable. Okay. So you want to make sure you have one repository where all of that information gets into one spot. You can now layer almost any application into an accounting system. That is one of the great joys of being in the cloud universe in the last 10 years. I don't necessarily have to teach people accounting anymore. I can usually teach them softwares. George is in here. He has a wonderful software that he works with that actually helps automate and helps with cash flow on the accounts receivable side. His service is one of the ones that I've seen clients layer in to help expedite their businesses. We have lots of different kinds of applications out there that can be very industry specific that will tie that in, but all of them tend to work in the same way. Typically, they have these forms that are in there that are allowing you to collect all of this data from multiple tables that go on behind the scenes that you can then use in different ways. I always say the more information that you can put into these forms, the better off you are in the long run because you may not think that you want to track your customers and their addresses now, but 3 years down the road, you may want a mailing list. If you get into the muscle memory of doing it now and putting more information in there now, you'll have more details to be able to pull out when you start to make those decisions. But that is a hill I will die on, and there is a really good chance I will die on that one because everyone always wants to do it as fast as possible. But by training ourselves to start to do that, and by training ourselves to use these forms and all of that, not only does it create that double entry accounting behind the scenes for us automatically, but it helps reduce errors, it speeds up the reporting aspect, and it gives us more information. And it allows us to have more reports that are real time with the information that we have. One of the biggest things, keep it simple. Use that example that I have of the post-it notes. The more simple that you're able to keep your bookkeeping, the more likely as a solopreneur, you're going to sit and actually do your books and you're going to prioritize it. It is a habit that you want to get into. It is a habit that everyone avoids. I am an accountant. I will tell you, cobbler's kids never have shoes. Like, never have shoes. I will get everybody else's stuff done. I don't want to sit down to do mine. I get it. So keep it as simplified as possible so that you're getting the information that you need. But make sure, especially if you have hired somebody else to do it for you, make sure you're reviewing your profit and loss monthly, preferably your balance sheet at the same time. But like, if I can just get you to look at your profit and loss, I'm going to be happy. All right. Because you want to make sure that you're catching any errors that happen. You want to make sure that even if you have the best bookkeeper in the world, you understand what's going on in your business. And you want to be able to ask questions. The more often you look at these, the more quickly you can make decisions that can pivot your business, even in very small ways that will actually grow over time. You know, and the more that you can simplify those reports, and even if you're just looking at a few items on those reports, like that are your big ticket items, it's going to make for faster decision making for you. And it's also going to get you out of the back of your head. How many of us will wake up at 2, 3 o'clock in the morning going, oh God, am I going to be able to make that bill? Can I afford to do that? The more that you look at this information, the less it takes off of your brain for those wake ups at 2 to 3 o'clock in the morning. Okay. And I don't want anybody waking up thinking about accounting because, like, there's so many other fun things to wake up and think about. Like, so many things. And that's coming from someone who actually enjoys accounting and is a total nerd. But, like, I don't want to think about this. I don't want you to have to either. All right. So that is the bulk of everything. And I am amazed because I am 2 minutes earlier than I was trying to be. And I'm really hoping that you guys have questions and that this was helpful. We are going to be running a 6-week class that really does a deep dive into this starting in October. It is up on the chamber, so please, if you have any questions about that, I know a couple of you have already reached out to me, but please reach out about that. And hopefully from here, does anyone have
Yeah,
questions?
Megan, I have a question. I mean, this
Please.
was a great overview of everything too. But just from a, I don't know, maybe practical standpoint or a
Yep.
use standpoint is, if I have an accountant, when or why do I need a bookkeeper, and kind of what's the difference for my business for,
Hmm.
for using the two different ones?
Yep. So if you are working with a tax accountant, you want to make sure, are you working with them just on tax? If they are just working with you strictly on a tax basis, they're not necessarily going to have the time or the bandwidth or the skill set to sit with you and work directly in your business with you and really understand what's going on and help you figure out how to move the needle and make that. Tax accountants, all accountants, it's very much one of those where some of us are really good in certain niches. Some of us have broader niches. It really depends on the right fit. Very often, I will sometimes recommend that the bookkeeper is separate from the tax accountant. And the reason for that is because the bookkeeper is going to be in your books more often. They're going to, depending on what their level is, they may be able to help you with the advising on that trajectory of some of the changes you will make. So there are very many different levels of bookkeepers out there.
Well, so that was actually
When, yep,
that was kind of part of the question too. I mean, you talked about having the balance sheet and profit and loss, and like most, I don't know most people, but some folks I know they have QuickBooks. They need to write checks or send money to someone, whether it's an actual check, but it's in the checkbook,
hmm
and then is it monthly, weekly? I mean, would the bookkeeper kind of takes
it really
over from
depends on
that
the
and
client.
make sure though that it is in the right account, and
Hmm.
keep and they actually keep that profit and loss or balance sheet kind of on an ongoing basis for their client, for the business owner, and then that gets sent to the accountant, or for just
So
from
it depends on the level of bookkeeper. It depends
okay.
on the level of bookkeeper. It depends on it can also depend on the level of accountant, to be honest.
Well, should it does
Um,
it depend on the bookkeeper, or how do you know what kind of level you need a bookkeeper, or do they look at, here's your business, here's what I do, and they tell you, well, here's what the service you need, or
The first thing that I do when I have any company reach out to me to either replace a bookkeeper or to talk about bookkeeping for their company is we start to talk about who's doing what. And depending on that level of what the needs are, if they're looking for someone to just do write-up service, most likely they're going to be they tend to be focused more on the profit and loss in those items. And then either a tax accountant or if I'm overseeing a bookkeeper, then when it comes to moving items to the balance sheet, I tend to be the one that's doing those or breaking out more complex transactions and things like that. There are wonderful full charge bookkeepers. I, for many years, did not realize I was an accountant because I had been in bookkeeping for so long. Yeah, the way that I actually figured out that I was a controller of a company was by taking a very low level temp job and ending up in the situation where I was running a 17 company software migration and overseeing at that time 7 people that were entry level. without realizing that, wait a minute, maybe I have a different skill set than I've been applying jobs for. Um, so there can be a lot of different areas out there. One of the reasons that when I left the tax world and came into this business was because I was also seeing the different levels of bookkeeping out there. So I also work as a resource for other bookkeepers in the area. But the main things that I would look at are, where is the division of labor? What is the level of complexity of the transactions that are going into it? And what is the level of trust you have for that person in that seat? Because the number one areas also that we find fraud and that we can find embezzlement are typically in those areas. So you want to make sure that you're setting it up with a certain level of controls on who can do what and who has to approve what. Um, I personally try absolutely as hard as possible to never, ever, ever have full writing access to any of my clients' bank accounts. I want reporting only access. I don't want to be able to do transfers. If I can do transfers, I want to make sure that there is a way that they can be approved by the owner or whoever has financial responsibility. I don't want that burden. Because if anything ever went wrong, I'm the first person they're going to look at, and I should be the first person that they would look at. So that's it's a very it's a very layered question. A lot of tax accountants will like to have their bookkeeper, they'll have in-house bookkeepers to do the work. But what some of my clients will find is they're not getting the detail in the reports that they need to make the decisions within the day-to-day of the business to be able to shift things within the business. So in that case, it often makes more sense to have a bookkeeper that is removed from the tax accountant because we're not just focused on the numbers for taxes. My entire goal is to get the world, and to my tax people in here, this is nothing against you guys, but my entire goal is to get the world to the point where we have a separate bookkeeper or controller or finance person and tax accountant that will work together, because on the tax end, we don't tend to be in there in the day to day. We're looking at you maybe quarterly. More often than not, we're looking at you hopefully every 6 months, but a lot of times we're only looking at you once a year. And that once a year, I can't actually I can't make the shifts or have you pivot fast enough to be able to help that tax year, if that makes any sense. All right, I do see Susan, you had a question.
Yes, thanks so much. This was great. I finally know the difference between a P&L and a balance sheet in very simple terms. So thank you for that.
You
As a
totally made my
communication
day.
professional, simple, clear. Thank you for that.
Oh yeah, I
Um,
like to keep it simple as
so
possible.
I'm a solopreneur. I'm a leadership and communications coach, and the majority of my clients private pay,
Hmm.
right? And so my question is, what is the best way to show my proof of revenue for taxes?
So you want to,
Like I
anytime that
don't have 1099s. I don't have any of them.
you should have people that are giving you 1099s. That means that
Private
on
pay
their business,
clients,
yeah.
but
So
these are
private,
individual people. They're
oh,
not,
individual people, okay.
yeah.
So you want to be very regimented about making sure that you're recording things very clearly.
Yep,
You want to make sure that you are always depositing into your business checking.
yep.
Deposit everything,
Okay,
everything. Even, if you want to take cash back off, deposit the full amount and then do a withdrawal. Keep it
okay,
as clear as possible for not only you, but for if for any reason you were ever to be audited. And make sure you keep track of the invoices that you're sending. Make sure you keep
okay.
track of your reports, things like that.
Okay, so
That's
what I'm
going to help
hearing
you get more of
is
that.
invoices. I also do payment receipts to my
Mm-hmm.
clients once I get,
Perfect.
yeah, I do
Yep.
payment receipts. And then what I'm hearing is a very clean bank statement from my business account where everything is coming
Yep.
in and out.
Yep. And if for
Awesome.
any
That's what I'm
reason you
doing.
need any of that money for like personal, make sure
Yep.
that you're recording that as a withdrawal out of the company so you can very clearly see that it's a draw.
Okay.
Just think about it from if the government were going to come in and look at my books, I want to be the one that has chosen where those things are and that I can prove to them that that's what that is because I know my business better than they do.
Great.
Okay.
That's super
They're going
helpful.
to have the
Thank
super
you.
rules, but like that's going to help you more. All right, Scott, you're up. You're muted.
Yep, I saw it.
Okay.
So as a tax accountant, we
Yes.
do not do bookkeeping in-house. We actually sold that division years ago. But for back to Sheldon's question about if what do you need? What level do you need? I work with a lot of bookkeepers, and I am amazed that the amount of bookkeepers out there put the data in, and that's it.
Never look at
They don't look at it. So if you're
it.
working with a bookkeeper, and you should have that monthly meeting some way, shape, or form. But if you're not looking at it, and because they're just throwing stuff in there. So
Yep.
the big one I see is auto expense. You're renting you've got a loan out for the vehicle. Well, GM Financial, that's obvious, $1,000 a month. I have 12 of them in the wrong section. So you need to know that your bookkeepers are looking at this stuff and asking questions. If they're not, I would recommend that you find someone new because I see a lot of it, and the owners are mystified at tax season why this is not what it looked like in the P&L. Well, it's because it's wrong. So, because
So
when we
I
do the
will,
return, we go through everything. So go ahead.
yep. And I will also interject on that with loan payments too, breaking out the interest, depending on if your tax accountant is the one that breaks it out at the end of the year for you, or if you're doing it at that time. But consistency is always going to be key. It could also be a matter if it's in an in-house bookkeeper, it could be a matter of they need training. And that's one of the things that I go in very often. Anytime that I'm brought a situation where there is a bookkeeper being replaced or something like that, there are a series of conversations that go on because I also know that very often those bookkeepers are also the office managers and they're going to know that business very, very well. So if it's a matter of just training them into consistency or training them into good habits and figuring that out, that is something that can be turned around very well. But yes, the tax accountant should always be reviewing things at the end of the year. I'm really glad to hear Scott say that he does. I do definitely also have a couple that do not. So,
Is,
you
is
know,
that so, is that similar? Things similar. I hear stories of you bring a shoebox full of receipts to the bookkeeper.
my first year in
Whatever.
my tax firm, I actually had somebody bring in 4 suitcases of things, and I was the odd man out because I was the only one who knew how to do the forms that weren't electronically there yet
Hmm.
for the back taxes. So yes, they do that on a regular basis.
Oh, great,
I
thank you.
don't take those clients. I don't.
No, okay. Well,
No,
thank you, Megan. That was like
that's
incredible. Some great
and thank
information.
you, Scott, for jumping in on that.
Yeah, I think
Welcome.
Um,
we're
Thank you
near.
very
If
much.
there's anything else to add, we're nearing the end of our time,
Yep.
and
I
you know.
know that Sarah has her hand up, so I just want to make sure to jump in
Oh,
on
I'm
her
sorry,
very
I didn't
quickly.
see it. Yes, go ahead.
Sure, thank you. So I actually have two questions.
Okay.
One is, so my business is an LLC as an
hmm
entity, but it's for tax purposes, I'm an S corp.
Okay.
My question is, I self-funded, so I didn't take loans, but owner investment. Now, when I want to use money from my business to, say, pay my taxes, how should I be doing that? As an owner draw or repayment of a loan?
So that's one that I actually typically will bounce back to your tax accountant
Okay.
because depending on your tax accountant, if they have put that self-funding in through officer loan, then you can pay down from there. But it can also cause taxable events, or they can be done as distributions, or because you're an S corp, you're also supposed to have reasonable compensation as an officer. So all of those things go into the mix that is your own personal tax world. And when you're an S corp owner, because the way that the funds flow through, so that is one where I would push back and have you discuss with your tax accountant how they want to do it, and then based on that information, we would talk about how to put the actual physical transactions in, because there are too many different little pieces that can affect um your entire way of looking at it. Like
Okay.
it has more than one ripple effect often.
And if I might interject on the loan thing, the IRS has some very stringent regulations on owner loans. So if it doesn't walk, talk, and smell like a loan, it's not a loan. So if you're not paying yourself back monthly, you don't charge yourself interest. It's not notarized. It's not a loan. It's just owner investment, and
Okay.
that whole thing will change your uh, K1, and it will also change your basis in the S corp. So if everything I've just said you went right over your head, go back to your tax accountant and ask them about basis
Okay.
and see if they can answer the questions, because that
Okay.
all affects your taxability, especially when you sell the practice down the road.
Okay. Thank you.
And we love the reasonable compensation part of what you said, Megan, too, because we help there. Anyway,
Exactly.
we're coming up to the end, pushing to the end. So I want to thank everybody for coming, and thank you, Megan. Of course, it was a great webinar. I think we learned a lot, and we know that there's a lot to know and a lot to learn. So in the next day or so, everyone who attended, you'll be receiving a survey as well as a recording of the webinar. And if you could please fill out the survey, this helps the programs committee identify needs for upcoming webinars as well. And our next webinar is going to be on Wednesday, October 1st, with cybersecurity, action to protect your business. So stay tuned for that. You'll have registrations for that as well. And I thank everyone for coming. Carlene, did I miss anything or anything else we
Nope,
need to let people
that was
know?
perfect.
Okay,
All
thank you,
right.
everybody. And we're right at 10:30. So thank you all.
Thank you so
Thank you,
much, guys.
everyone.
Thanks, Megan.
Thanks.
Have a good day.
Bye.
Thanks. Bye now.